Good morning, traders. This is Shogun Chat 247. I train traders how to trade in harmony with the market. Before you can trade any market successfully, you need to understand the foundation of market movement, which is trends, consolidation, all the good stuff that we've learned to observe on the chart. Let's start with the basics. A trending market, we all want to ride a good trend, but majority of traders do not actually understand what constitutes to a trend. So I'm going to use the paint. So let's say uptrend. The first thing you need to understand is what makes a trend an uptrend. We call it a series of higher highs and higher lows. Okay, these are basic stuff. But people, when you are emotionally involved in the trade, you don't actually you don't remind yourself what makes a trend an uptrend. So what that means is a series of higher highs. So we have a high here, we have a high here, more than one. It could continue, but the minimum requirement for an uptrend is two higher highs and two higher lows. Okay, that's an uptrend. Conversely, for a downtrend, a series of lower lows and lower highs. Okay, so this is a lower low, this is a lower low, this is a lower high, this is a lower high. This is the foundation of a downtrend. This is the foundation of an uptrend. Okay, that's the basic stuff. So in an uptrend, it means it shows that the buyers are in control and the market is pushing upward. In a downtrend, this means sellers are dominating the market and is moving lower. Okay, so that is the first step of understanding what a trend up or down looks like. So now let's move into the second part of this lesson, which is the facts about trends. And here are some things that I would like you to understand. A trend will not change easily. Once a trend is in motion, it tends to continue. That's the first fact about a trending market. The second fact is it takes a great deal of time and effort for a trend to change. It will not happen all of a sudden. The third fact is there's almost always a warning sign before a trend changes. A shift in price behavior that hints what is going to happen next. We call it, in terms of wave of success methodology that I teach, we call it a trend changing pattern. There's a price action during the pullback. So let's say we have a trend going down and we are having the pullback, we are having the pullbacks, and we have a downtrend. During the pullback, you will have what we call a trend changing pattern and information that warns you that after the wave completes, you are going to have a trend reversal or a trend changing pattern. Then finally, in terms of the facts about the trend, the larger the ongoing trend has been in place, the longer it has been in place, sorry, the more time it usually takes to turn around. If this trend has been going for a very long time, you're not just going to expect the trend to change like this unless you are in a consolidation market. That means you are not in a trending market. If you can establish the direction of a trend, the trend is likely to continue unless you have a trend changing pattern before the current action that you can see on your chart. So the third part of this lesson is what are the keys to a successful trading? Okay, what are the keys? In my experience, there are fundamental truths, or I call them the fundamental keys to trade any market effectively. I'm going to give us four. Okay, the first one is you need to be able to identify the market condition. Is it an uptrend or downtrend or consolidation? Very important, because the approach you're going to take, taking a uptrend and downtrend, is different from the approach you're going to use in a consolidation market. So you must have a good understanding or a way of identifying the current market condition. The example here, which I'm going to do, this is the pound US dollar 5 minute chart. As you can see, if I squeeze this chart up nicely, we have a downtrend. Let's just pick from this point here. Price has been coming down. Then we have a correction. This correction is giving us information. Okay. And this is the example that I was sharing about a trend changing pattern. This correction is different from this correction. This one is very shallow, not a lot of buying activity. But with this correction, buyers are interested, and we count the wave to be able to tell us what level can we see the price, or to interpret the price that this is not actually a normal correction. This is what we call a warning sign that the trend is likely to change. Okay, and we've seen that. Then our thinking now is we can still sell it because the wave structure hasn't finished, and I'm going to talk about that in a bit. But I know now that once this wave structure completes, the trend is likely to change, or a strong reversion is likely to occur. Okay, so you need to be able to identify the market condition. Is it trending up, trending down, or consolidating? Because if you are able to do that, then you can tailor your methodology to that market phase. Okay, that's the step one. The second thing to understand in order for you to trade any market effectively is to understand how price behaves at key highs and lows. This is where decisions are made and momentum often shifts or continues. Okay, so you must be able to identify those key levels. What I use is the last 4 daily highs and lows. You can see them on my chart. Okay, these are major levels for us, especially if you are an intraday trader. The bigger you go, you can use the weekly highs and weekly lows, or monthly highs and monthly lows, depending on the style of trading that you do. A long-term trader will use the weekly or monthly. If you are medium-term or intraday trader, the ideal highs and lows is the daily highs and lows, the last 4 daily highs and lows. Those are very key to our methodology, the way we read the market. Okay. Step three is you need to understand the structure of price waves. Okay. Price move in trends, the trend moves in waves. This is a simple bread and butter stuff that any aspiring successful trader should understand. This move price move in trends, and these trends move in waves. There are two different types of waves. We have the impulse and the corrective waves. I've done several education pieces on that. Okay, so you need to be able to understand the behavior of the waves. By understanding the behavior, you will be able to interpret it and make a better trading decision. Okay, so the fourth fundamental thing that you need to know is you must execute the trade that aligns with the market condition. Okay, so a strategy. If you are in a downtrend, okay, the best area you want to be selling from is this area here. This area here. Okay, you may not be able to catch it at the top, but at least you need to have a criteria of entering the market after the pullback in a downtrend market, or in an uptrend market. You need to be able to identify the pullback, then take the trend at the end of the pullback, or at least towards the end of the pullback. That will ensure that once the price is going back in the direction of the trend, you are in profit and you can make some money on the trade. Okay, so my advice for anybody looking to trade a trending market is you don't fight the trend. Instead, work with the natural flow of the market. As the market is moving up in an uptrend market, if you are not in that trend, you have to wait for the trend to give you a discount, as in pullback, and you can get involved in the direction of the trend after the discounting of the price. Okay, so this is a short video in conclusion. Okay, trends from the heartbeat, it forms the heartbeat of the market. Okay, trend forms the heartbeat of the market. It will not trend all the time. You can see a market like this. We have a very strong move yesterday, then we went into a little bit of consolidation slash pullback. Okay, then immediately they are satisfied with this move, we start to see a break in the direction of the trend. This is what I was talking about. You need to now learn how to get involved when the trend is about to resume, having in mind the pattern of the correction, because this phase here, this phase is the information phase, this pullback phase. We call it the information phase. It tells you what is going to happen next. Okay, so it is very important for you to learn that. So when you learn how to recognize this type of pullback, okay, you need to be able to interpret the information, and also you have to respect the trend. Okay, read the signs, give yourself a real edge. If you can identify a trending market, you have an edge. That's the first thing. You identify the direction of the trend. Then the the key is now to be able to wait for the price to act in your favor. What that means is you know the direction of the market, so let the price be discounted. It's good to wait for the first break like this. So we have a trend down, it has given us a pullback. We've waited for the first break, and the pullback of that first break did not continue the correction. That area is a good area to sell, and you put your stop loss at the highest point of the pullback before the break. And that is how you enter into an ongoing trend. Okay, and your job is very simple: be patient, stay observant, and trade in harmony with what the market is showing you. If you like this short educational video, give us a thumbs up. My name is Shagun Chat 247. I love to do an educational piece like this. This is what we do at Chat 247 Trading Academy, and I'm just happy to share my knowledge and wisdom with you guys. Stay blessed and God bless.